All right, hello everyone. I welcome you all to the style session in 2023, and hope you guys all know that style is the SoCal Tamil Youth Leadership and Entrepreneurship. It's a youth empowerment initiative from SoCal Tamil nonprofit organization, and it's really great and amazing to see many new students joining in this session. And hope you know myself, Saravanan, and also we have Mr. Prabhu are the coordinators of this program. And in Style, we conduct various sessions or workshops for our students community in the different areas like entrepreneurship, leadership, volunteering opportunities, public speaking, STEM, and so many areas. And one of the key areas that our program has been focusing is to improve the financial literacy in our students community. And that's why we conducted a series of finance 101 sessions in the last a couple of months ago. And this is one of the key session in that topic, improving the financial literacy. And one of the very critical question here is we're all working for money, but how your money can work for you, right? So that's the topic of discussion today, and we have the great speaker, Mr. Satya, with us. And let's move on briefly to the agenda. All right, so introduction, housekeeping, and quote of the day. I'll be covering that part briefly. And then we have the chief guest introduction and welcome address by Prithvi Madan Kumar, who is in sophomore year in Roosevelt High School in Eastvale. And also we are going to hand over the floor to Mr. Satya. And we're going to have a lot of information and fun filled quiz and question and answer and more collaborative segments in this session, and also followed by a vote of thanks from Chinmay, who is also a student volunteer from Roosevelt High School. So very quickly, in housekeeping announcements. So we will be uploading this recording in our SoCal Tamil YouTube channel to benefit the students who can join. And also we want our students to go back and watch the videos and come back with questions and make it more collaborative. And it's totally voluntary to show your video, and we encourage you to be more speaking instead of more listening. And please mute yourself when you're not speaking, and feel free to send your questions in the chat box, and we'll go through the questions at the end. This session is not just for students, parents are also welcome to join. And let's move on to the quote of the day. So the quote of the day is going to be in wealth management area. I'm going to quote two investors. So one of the investor is who invested in the financial or wealth management in 2000 plus years ago. He lived with us. He's none other than one of the greatest poet from Tamil, ancient Tamil. So Thiruvalluvar. And what he says is, let me just read it through in English. The imperishable light of wealth goes into regions desired by its owner, or and destroys the darkness. So porulennum poyya vilakkam irularukkum enniya theyathu chendru. So when you have the imperishable light of wealth in your hand, the darkness can be destroyed. So that's what this Tamil poet said 2000 plus years ago. And there is and he invested a lot for the financial well-being, and also so many areas of human evolution. And the next quote is from Mr. Robert Kiyosaki, and what he said is exactly what reflected in our title: don't work for money and make the money work for you. And hope you might be heard about this a person. He is a great American entrepreneur and also a businessman and author of so many books in the personal finance and business investing. And he is also strongly a believer in the financial literacy. It's a must for everyone, and mainly the students at the young age. And he's kind of an author for more than 26 books. And similar to Thiruvalluvar and Tirukkural, what we quoted here, his books also translated around 50 plus languages. Tirukkural has been translated 100 plus languages, right? So I just would like to connect what these great legends told us. All right, so moving on, that's the quote of the day. And moving on, let me introduce Mr. Prithvi Madan Kumar. He's doing his sophomore year in Eleanor Roosevelt High School, and he's also an active volunteer in SoCal Tamil Kalvi, and also in various style initiatives. I would like to call upon him to introduce our guest speaker, none other than Mr. Satya. Over to you, Prithvi.
Thank you, Sonakul. Good evening, everyone, and welcome to today's SoCal Tamil Style program. Today's program was planned and organized by Sarunakul, to whom I extend my thanks. I would like to welcome our chief guest, Mr. Sathiyaraj Thangavel, who is a director of IT at Molina Healthcare. He has 20 plus years of experience in IT and healthcare sectors. He is also passionate towards stock market and data analysis. 12 years ago, he started to build something to help kids towards their financial independence. He also built a unique tool for stock market traders called P3 Traders. The purpose of this tool is for traders to make a more informed decision when trading. He also developed sophisticated data models using various unique indicators and conducted extensive backtesting with centuries of historical data to identify various patterns. His vision is to share his knowledge with other young individuals. He holds a master's degree in computer applications from Bharatidasan University. He's also one of the founders of the SoCal Tamil organization and a former treasurer for 4 years. Once again, please join me in welcoming our esteemed guest speaker, Mr. Sathiyaraj.
Thank you, Prithvi. Welcome, Satya. Let me stop sharing and we'll hand over the floor to you.
Can you able to hear me? Okay.
Yes, we can. Yes, we can see your screen. Your voice is a bit low, but yeah.
Okay. So I'll be little loud.
Yes, now it's better. Thank you.
Okay. Thank you, everyone, and thanks, Saravanan and TV. As Saravanan mentioned, right? So the proverb, I mean, the Tirukural, whatever he mentioned. One important thing is there is a major difference between wealth and richness, right? If all you are rich, anytime you can be poor, but if you are wealth, you cannot be poor, right? So
Satya, sorry to interrupt. Your voice is still a bit low. It used to be really loud and clear, but I'm not sure. Is it only for me? Prithvi, how does Satya uncle's voice for you?
It's a little bit quiet. I can't hear.
Yeah. Sorry, Satya. Thanks.
It is a bit low.
Yes. Thanks, Daniel, for confirming. I was thinking it's only for me.
okay, how about now?
It's awesome. Loud and clear.
All right. All right. So as Saravanan mentioned on the Tirukural, right? So there is a big difference between you are rich and you are wealthy, right? Rich is basically you can become poor anytime, but wealth, whenever you have the knowledge, that makes a big difference. I really love this proverb, right? This is resonates with what we are going to talk about this. If you feed a fish for a man, he can be fed only one day. But if you teach them how to catch the fish, it would be lifetime. That's what we are trying to do for you all, that how to catch the fish. Okay. With that said, the idea behind for this today's session is going to be like how your money can work for you, right? Especially I'm going to cover mostly on the stock market area. Before that, a quick disclaimer. This video, we are going to talk about more stocks, and I'm going to give some examples about the stocks and the illustrations. And this is just for our education purpose only. We are not going to give any investment decision, and you should not be investing based on this one. Okay. And okay, today's game plan, right? So what I'm going to do for next 1 hour would be is like we are going to talk about trading and investment, and there is a big difference between what is trading and what is investment. You may hear about all these things, and we will have a short piece about what we thought about trading and investment, and then we will be having a sample strategy. Strategy is something like how you can invest and things. So I'm giving you some sample strategy to get an idea of it. And then at the end, we are having Mr. Nimalan, who is at the back. He's studying 3rd grade in Eastville Elementary. He loved to do trading. So I personally built a video game for him with the livestock data worth of 10 years. So he's going to show you like how he's playing video game on the day trading. Hope it's going to be enjoying. I will keep as fun as possible. And if you guys have any questions, put me on the chat. And I think it's an 1.5-hour session. I'll try to complete it as fast as I can. But if I'm going really fast, please let me know. So I'll slow it down. And we at the end we can have a Q&A session, and we can talk about if you're having your own favorite stocks or a business, we can talk about that if all time permits. Okay. Let's get into it. So what is a business and what is stock market, right? Let's start simple. So you guys all know, right? Apple, and most of the people have iPhone, right? And Apple as a company, right? They go to the public and say like, hey, I'm going to have extend my company. So I need you guys to invest on my company, and I will be giving profit to you. Okay. So how it was organized is basically through the stock market, where they will say like, hey, I'm going to sell this Apple share for the public. And if you're interested on my business, you can go ahead and buy my share. And then whenever if I'm doing good, and the stock value will increase because I'm doing good business and I'm getting more profit, selling more iPhones and iTunes and other stuff. So I'll be getting more money. Then if I get more money, your share will also increase, value will increase, and you can sell it anytime. Okay, that's the concept of like how business is interacting with the stock market. And what is stock? Stock is nothing but a piece of business that you are owning about that particular company, right? And whenever you want, you can sell it and buy it. That is the stock market. The stock market, if you think about it, it's like a Costco or a Walmart. You go in, you want whatever you want to buy. Only difference is you can sell it there also. So you want to buy something, you can buy it, and you can sell something, you can sell it. That's the difference. And that's called stock market. Okay. And let's talk about what is investment, right? To just give a simple idea, right? So say, for example, in 2019, you buy an iPhone XS for $1,000, okay? And you are holding it right now. Now the trade value of that particular phone could be like $150 or $160, right? But instead, I'm not saying you should not be buying iPhone, but instead of that, if you are, say, for example, you are having an iPhone and within 1 year you want to change a newest model, but your phone is working well, instead of changing a new model, let's go and invest it in Apple, right? Just as an example. So let's assume you bought an Apple share, which was selling at like say $50 in like 2018-19 period, right over here, right? You bought it and then you are keep holding it for like this 4 years, right? And then right now what happens is its value is $150. So it was like 3 times. Say if you invested $1,000, now it's worth $3,000. To give you guys a very simple example, this is called investing. You put it in a company, you trust that company is going to do good, and then you will wait for the company to grow. And then once it grows to a certain place, if you want to sell it, you can sell it, or if you want to hold it, you can hold it, right? That's called investment. Okay. And what are the different types of investment? Say, for example, you have $1 million, right? Everybody wants $1 million. So you have $1 million, right? You cannot put it in the bank and you are holding it, right? You can buy a car, you can buy other things, right? And what you are going to do with the rest of the money, right? So you can put this in different investment areas. One is like, say, stock market. Real estate, you can go and buy a house there, right? Or you can leave it in a savings account where the bank will give you a minimal interest. Or you can have a bond market. We can talk more about those things. Crypto, you all know cryptocurrency. You can buy crypto, Bitcoin or Ethereum or things. And you can put it in a mutual fund or Forex or commodities. These are all the different areas. I don't want to explain all these things right now because we will concentrate more on the stock market. But just to give an idea of it, these are all the various places you can able to invest your money. I call it as park your money, and then the money can grow based on how much you are risking and things like that, right? And each of these vehicles or each of these places where you are investing the money, it has the risks and rewards, right? Say for example, if you are putting it in the savings account, it's very low risk. Your money will not go anywhere, but the returns will be like 0.1% interest the bank will give. So risk versus reward, how much you are risking and how much you are getting rewarded is based on the places where you are going to invest. Okay. Then the question is, why stock market? Right? Why can't we go and do it in real estate? Why can't we do it in crypto? Why can't we do it in other places? I'm not saying other places are not good. Everything is good, but stock market would be a little bit more appetite for me. And also to explain it, it would be more easier because I don't want to be a jack of all tricks. I want to be like expert on one area, right? So why stock market, right? It is first thing comes is liquidity. Like, what do you mean liquidity? Say, for example, you want to buy a house in a particular area, say Eastvale or Irvine, right? And you are ready with the cash, you want to go and buy the house, but there is no house in the market. Nobody is willing to sell to you, right? Then you are stuck. You don't have, you are ready to buy a house, but you are stuck with it. So, but in the stock market, right? So everybody is going to selling and buying it, right? It's easy for you to get into the market, buy some shares of Apple or buy some shares of Tesla, and next day you want to sell it, you can sell it, or next 10 years you want to sell it, you can sell it. So it is very easy to get in and out because the liquidity is high, because everybody want to do something. So it's easier. Other thing would be is accessibility. What do you mean accessibility, right? So I'm taking the real estate as an example, but again, real estate investment is really a good investment, but just giving an idea of it, okay? So if you want to buy a house, right, you need to have a realtor, you need to have a bank to give you the loan, you need to put it. So there are a lot of process around it. But in the stock market, if you want to, hey, I'm new, I want to get into the stock market, right? So you can go and talk to a stock broker. Stock broker is like TD Ameritrade, a lot of companies there. They will give you their software to buy and sell stocks, and then you can able to submit. And hey, can you buy an Apple, one share of Apple, right? If you inform them, they will buy it for you and they will hold it for you. And if you want to sell it after 2 years, hey, sell my one Apple share. They will sell it and give it back your money. They are the stockbrokers, right? And it's very easy to open an account, and then you can move your money from your bank account into the stockbroker account, and within 1 or 2 days you are ready to trade. It is that easy. So accessibility is easy. And the third important thing is portfolio diversification, right? So say for example, you are investing in only one place, right? You never know whether it's going to go down or sideways, or you're going to lose it or things like that. So diversification is something like, okay, I like banks, right? You go and buy one bank of share, right? Let's say Citibank or Wells Fargo, right? You buy one share and you say like, hey, I like retail company, right? And then you can go and buy a Walmart or Amazon, one share, right? And then you think like, hey, I'm really liking some other sector, right? Healthcare sector, right? I mean, then you can go and buy some healthcare companies. So what happens is you can have all different companies and you can build your portfolio. Say you have like say $100,000, you can put $10,000 on each of these different sector-based companies, and you can build a portfolio. What it means is it would if one sector goes down, the other sector will help you out. So overall, your fund will be really good managed, right? And it has a long-term growth, because over the period of time it will grow. And also you will have a wider range of opportunities, because if you want to get into the international market, you can do it. You can invest in China, you can invest in Brazil, so Europe. So you have that wide opening opportunity there. So that is also an important thing. Okay. All right. So coming back, there are two ways you can interact with stock market. One is trading and another one is investing. Let's talk about what is trading and what is investing, because you will hear a lot in the news or in the channels, YouTube channels and social medias. You will hear a lot between these two things. Let's define what are those, right? If you're talking about trading, trading is something like you are running a serious business. You are running a business, right? So it is a short term, and trading has another two flavors. One is like, say, you can do a day trading. You will do like morning in our Pacific time, 6:30 market opens, which is 9:30 in the New York stock market, and then closes at 1 o'clock. So you will be staying there for the whole day, and you are buying and selling the stocks or whatever it is, right? Options and other vehicles you can do. So that is day trading. And swing trading is something like, okay, you will buy something, hold it for 1 or 2 days, and then selling it. So that is more of a trading idea. So what it means is like, it is very short term, very fast, very volatile. You need to move very agile in and out kind of a thing. Investment is something like you invest it long term, you will wait for it, like our example, what we saw it in Apple, right? So you buy it on 2019, you leave it there, don't worry about it because you know Apple is going to do good. Don't worry like immediately sometimes, oh my God, like COVID comes in, it's going to be disaster, so I'm going to sell it. You should not be panicking, relax, go, and then you will have the growth. That is more of an investing. In your simpler terms, how we can explain it is like trading is something like you are running a 100-meter race, right? Sprint race. So you need to be really fast, agile, running like 100 meters, go fast, and then get rid of it. I mean, completing it. That is on the trading side. Where in which investing is something like you are running a marathon, right? You should not be sprinting in marathon, right? You need to go slow, stable, steady. You need to be in the right pace to cover the long distance of it. That is more of an investing idea of it. Okay. So for any questions, you guys can put it on the chat. Am I going fast? Okay. So the next one, you all know, right? Bolt. So he spent 20 years practicing to run for only 2 minutes, right? He ran only 2 minutes in his whole thing, right? But he invested 20 plus years on practicing to run that 2 minutes. That is investing, to get an idea. So think about, if you are thinking about investing, it is for a long term. And you need to have at least 5 to 10 years of vision, like, okay, I'm not touching it, leaving it, I'm doing it for something, for your college or something. Like now you are starting it, you need it in next 8 years or 5 years. That is investing. Okay. All right. So investing, right? There are three styles of investing there. One is called growth investing, the other one is value, and the third one is income. Those are the three types of investing. Okay. So what is growth, right? Growth is something like a company, like keep growing, right? Like Amazon, Tesla, right? Classic example. 5-6 years back, Tesla is like what, $50 or something, or in the conversion it would be like $10. Now it's $200, right? So it's gradually growing. You know this company is going to grow. It has a lot of potential and things like that. So I'm going to buy this company because it's going to grow, right? That is growth. What is value investing? Value investing is something like, I know this is a great company like Johnson and Johnson, P&G. These companies are great companies, but if the market is down, you can get it very cheap. And when you are getting something very cheap, that is the value. And if you ask me like how to find I'm cheap, we can talk more. We call it as the PE ratio, which is price to earning ratios and things like that. It's nothing complicated. Don't think like, oh my God, that is too much mathematical thing. It is very simple to identify, oh, this company is really a good company, but right now it's undervalued, which is like very cheap. Then I will go and buy it, kind of. If you all know Warren Buffett, Oracle of Omaha, he is a value investor. He always go when the market is down, whenever something is, if he feels cheap, he will go and buy it. And provided the value of the company is really good, he will buy it and hold, right? There's a question came from Daniel. What is volatility? Volatility is something like if a stock, right, stock price goes up and down, right? So if you are thinking about, right, COVID happened, all of a sudden all the stocks goes down, and then the value, everything was like, okay, COVID didn't hurt us, right? Then stock value goes up, right? And then there is a war in Ukraine, right? Immediately everything went down. There is no relation between Ukraine war and Apple, right? They are producing iPhone, but if everybody is like panicking, they will be selling, oh my God, oh my God. So it will come down. And then if they say, oh, everything settled down, like Russia is not invading or nothing happening, then it will go. So volatility is something like, okay, going up and down very fast, in matter of days, matter of hours, matter of minutes. It depends upon what you are doing. Make sense? Okay. And the third one would be is income investing. Income investing is something like, I'm investing on a company which is absolutely stable, but it's not going to grow, because if I buy it for $100 a stock of a company, it's not going to become $200 in next 5 years, like our Apple or some other company. But it is really a good company. And importantly, something called dividend. Dividend is something like every 3 months, that company will tell, hey, I got this much profit, so I'm giving you a percentage of profit, like 2% profit, 3% profit to you, right? If you are holding, say, 10 shares, it will give you 10 times of 2%, whatever they are giving to you. That is basically they are giving a dividend to you, and that is going to be an income for you. But the company is not going to grow. Like Coca-Cola, classic example, right? COVID period or any other period, right? The recently COVID comes in, everybody is at home, but everybody drink Coca-Cola. And Russia-Ukraine war, still everybody drinks Coca-Cola. So Coca-Cola will not go away in near future. So that company is stable. Are they going to grow? Probably not, because they are stable, and they will be generating a lot of revenues, right? Whenever they get the revenue and whenever they are getting the profit, they will be sharing with the investors, which is you. You buying a stock, then you are calling it as investor. You are an investor of that company, and then they will be paying you a dividend. So that is an income investing. Okay. In summary, right? What is growth? If the company goes up and up in the value, that is growth. Value investing, it's a good company, buy it cheap, and then you can sell it when the company performs really well, and then do it. That is something. Example is Warren Buffett, and really a good book if you guys want to read, Intelligent Investor by Ben Graham. That's a really a good book about value investing. It's this big, it will be boring, but it's a really a good book. Coming to income, it is like you need to hold for several years. Like Coca-Cola, I'll buy it, I'll forget it. Every 3 months, they will give me the profit, which is called dividend to me, and I'm good with it. And dividend is like renting a house and you are getting a rent for the house, right? Something like that. Okay. All right. So we talked about investment. Now we can talk about trading. So those are the two things I explained in the beginning, right? So as I said, trading is a business, right? If you need to sit in the market, if you are doing a day trading or swing trading also, you no need to sit in the market on day in and day out, but using your phone and other stuff, you can see like, hey, how is the things going? And then sell it in 1 or 2 days or few days, you buy and sell it in few days and things like that. That is swing trading. Day trading is something like you sit in the market like 1 or 2 hours, buy, sell, buy, sell, buy, sell. and you are making a rapid decision, Nimlan can show you all how he does day trading in simulation. It's like 2 minutes, 1 minute trade, go in and out, 5%, 2%, 3%, you will come out. And if you make a mistake, you will have -5%, -2%, you will do it, and then you will come back. That's how it operates. Okay, that's the idea of trading. Okay. Most important thing, right? You need to be realistic, and you need to have a very realistic expectation, right? You should not be thinking like, hey, I have $5,000 in my account, and next year I will be a millionaire. You cannot do that, right? So Divya, so the question is, which type of investment is good for us? That you need to figure it out, right? And all three types of investments, right, are good. And remember, we talked about portfolio, right? When you are selecting your portfolio, assume that you have $100,000, right? When you are selecting the portfolio, right, you need to select the portfolio in such a way that, say, for example, I'm going for one sector, say finance sector, right? And I need to allocate $10,000 for that one in my portfolio. So for that $10,000, I'm going to have, like, say, 5 companies, each company $2,000 I need to put in, just as an example, right? While selecting this 5 company, you can select 2 company as an income company, 2 company as a growth company, and 1 company as the other one, right? So you can split it up all 3, and then you can invest it. So that would be, I would say, that would be a really good strategy, rather than like going and putting everything on the growth company or everything on the income company, right? So that is called diversification and keeping it. I'll explain how to identify those companies and how to do it. And me and Saravanan spoke about that. If you are all interested, we can have a course, maybe for like 3 months, and then we can able to have a game. You guys can, I'll teach you like how to identify a good company and things, and you guys can go and buy those company. It's a game, right? There is websites where you can able to go buy and sell, but you are not actually buying and selling. They will give you like, hey, $100,000, and you can invest it, and then you can buy and sell, and you can practice yourself, and then you can prove to your parents that, hey, this is my return. And if you see, if you are having 15% return annual, then you are doing really good. If you are getting 20% return per year, then you are beating Warren Buffett. You are doing extremely well. So you can do your math. So you need to be realistic. You're having $5,000 in 1 year. If you are making it to $6,000, that's really good. Okay. All right. Now it's quiz time. Saravanan, do you want me to?
Satya. Yes, let me share my screen.
Okay, let me stop. Okay, before that, any other question? Anybody, please put it on the chat.
Oh, Uncle, I have a for the Kahoot. What's the code again? I kind of like messed up the code.
Oh, you mean the code? I'm going to share it anyway. Don't
Okay.
worry. Yeah. All right. Thanks, Satya. There was a lot of ground you covered in very short time, and still you made it very clear for the students. And folks, if you have any questions, feel free to unmute yourself and ask now, or after the quiz. Yeah. All right. So let me share my screen for the Kahoot.
Want to play Kahoot?
Okay. Can you see my screen?
Yes.
Let me copy the link and post it in the chat. Okay. Okay. Now it should be in your Zoom chat box. If you open the chat, a small window, you should be able to see that. I see Kavin joined. So you just need to click on it. You don't have to have an account in Kahoot to play this. It's just a educational gaming or quiz platform. Many of your schools already using it. Yeah, so once we have here about 30 plus participants, once we have a good number of participants join, we can get it started. Let's, okay, player limit reached. Okay, I think it has a limit, and I didn't know about it. Let me see what it is asking me to do.
Uh-oh.
Uh-oh, okay. I think yeah, I think there is a limit. I didn't know about that. There could be a problem with the, the Zoom and Kahoot
Together. Yeah.
together. Yeah. So there is an advertisement that I try to use it. They said like 360 days Kahoot premium subscription for Zoom users. So looks like it didn't work it out. Okay, anyway, let's have it started. So others can also see how this is happening. If you still click and if you're not able to join, that's okay, not a problem. You guys can all see the screen of questions and how this is going. Let me have it started. All right. So now you should have something like this in your screen. So you should be able to see the questions in them. Okay. What is a stock? So that's the first question. Can you see the 4 answers? The red one says a small flat piece of metal, and the blue one says that a type of currency, and a share of ownership in a company, a type of bird. So you got like 20 seconds for every question. All right, so we have we have 8 students answered so far. That's okay. Out of 10, that's a good number. So the right answer is stock is a share of ownership in a company. Moving on to the next question. Okay, scoreboard. We have Arjun Ji, who is the topper, and Ashwata, Kavin, Prithvi, and Neha. Good job, folks. Excellent. Let's move on to the next question. What is the stock market? A place where people buy and sell stocks, a grocery store for fruits and vegetables, a theme park with roller coasters, or is it a movie theater? Really? Four more seconds, 3 seconds, 2 seconds, 1 second, 0. We got 9 answers. Okay, the correct answer is a place where people buy and sell stocks, and all the 9 people have got the right answer. Moving on to the next question. Before that, we'll see who's topping this time. Oh wow, Kavin, you rock it, dude. And Ashwata, good job. Arjun, Prithvi, Neha, excellent. Moving on to the next question. What's a portfolio? A collection of stocks and other investments, a type of car, a type of house, a type of tree. What's a portfolio? You got 10 more seconds. Others can who are not able to access, just look at the question and look at the answers. You'll get some idea about what we are what we have covered so far. So the right answer is a collection of stocks and other investments in stocks, bond, and money market, and any other type of real estate. So they're all investments in different areas. So yeah. All right. So we got 9 students got the right answer out of 9. That's good. Moving on to the scoreboard. Kavin, this time again. All right, good job, Kavin. Ashwata, Arjun, Prithvi, and Kavin M with the fire. Wow. Kavin, you got a clone here. All right, so moving on to the next question. 4th question. What's a bear market? A market in which stock prices are falling, a market in which stock prices are rising, a market in which there is no change in the price, a market in which people trade bears. All right. What's a bear market? You guys have heard about like bear market, bull market, right? Yeah. Okay, so the right answer is a market in which stock prices are falling. That's the bear market. Okay, 7 students got the right answers right. Good. Let's see the scoreboard. Kevin, again, good job, Kevin. Ashwata, Prithvi, Arjun, and Dia. Good job. Good, very good. Moving on. Next question. 5th question. What's a dividend? A type of dessert, a share of the company's profits given to stockholders, a type of investment account, a type of car. What's a dividend? Got 10 more seconds. Wow, everybody answered within 10 seconds. That's cool. And all the answers are correct. That's cool. Dia has the highest answer streak of 5. Good job, Dia. Congratulations. And the scoreboard, Kavin again, Arjun, Ashwata, Prithvi, Dia with a fire. Wow. Excellent, Dia. Moving on to the next question. Who is a stockbroker? A person or a company who buys and sells stocks, a person who sells clothes, a person who breaks stocks, a person who fixes cars. Okay, good job. So all 10 of you got the right answer. A person or a company who buys and sells stocks for others. It's like a bank where you give the money, they save it for you, they give it back when you need it. Right? It's the stock market is an open market, and you need to have a broker to buy the stock and sell the stock. All right, so good job. Let's see the scoreboard. Wow, Kavin, you got it first, and Arjun, Ashwata, Prithvi, and Dia with the fire on. Excellent, good job, folks. Moving on to the next question. What's a bull market? A market in which people sell bulls, a market in which stock prices are rising, a market in which stock prices are falling, a market in which people buy bulls. So what's a bull market? We got 9 answers and all of them are right. A market in which stock prices are rising. So when the prices are rising, the charts look like a bull is kind of ready to fight, and when it is going down, the charts look like it's going down or declining, right? So it's like a shoulder of or a back of a bear. Yeah. So moving on to the next question. Oh, look at the scoreboard. Good job, Kavin. Good job, Arjun. Good job, Ashwata. Good job, Prithvi. Good job, Dia with the fire. All right. Dia has a streak with 7 correct answers in a row. Excellent, Dia. Moving on to the last question. What's the goal of the stock market investing? To make friends, to bet and gamble, to help businesses and individuals make money, to get famous. All right, everybody got their answers in, and the right answer is to help businesses and individuals make money, right? So if you want to, do a business and you cannot do it by yourself, right? So you want to collect money from other people and do your business, and then when you make profit, you share it with others. So that's the fundamental element here. It's not to bet or gamble, or it's not to to get famous here. And yeah. All right, look at the podium. Prithvi, congratulations, the 3rd, and Ashwata, excellent for the 2nd prize. And let's look at the spotlight. It's on Arjun. Congratulations, Arjun. Excellent, runner-up, Dia and Kavin. Let me do a screen save. All right, excellent. Good job, everyone. Let me stop sharing. Back to you, Satya.
All right. All right. You guys, can you hear me okay?
Yes, Satya.
All right. You guys surprised me. I didn't tell about the bull market and bear market, and you guys surprised me. Good. So to just a quick recap, right? What is a bull market? As Saran and Uncle mentioned, if the market is going up and up and up, that is a bull market, they call it as. And when the market tanked down and then started dipping down south, that is a bear market. Maybe you will hear about these things in the news and other stuff whenever you're watching. And there is an important thing. 70% of the market is called crab market, CRAB, crab market, which is a sideways market. So not necessarily every time it's going to fall or every time going to skyrocket. So a lot of times, 70% of the time, it will go on the sideways. What that means is it's not going to go reach stars, or it's not going to go down. So it will go on the sideways. So that is called crab market. Okay. Okay. So we are going to talk right now mostly about the investment, and Nimlan is going to talk about the day trading. So that's a different topic. But for now, let's talk about like a stock, how to analyze a stock. So if you are watching a movie or your dad comes in and say like, this XYZ company is doing good, right? Or Jim Cramer from stock market that you are watching and he's saying this particular company is doing great, right? You cannot go blindly with that guy saying something and you go and put money on that one. That is like literally gambling, right? Because it may go good or it may go wrong, and he cannot take accountability for it. So the question is, how will I analyze the stock? If somebody says like this is a stock or this is a business, what am I going to do? So these are all the four things. First one is learn about the company. What are they doing, right? Say for example, Apple. What are they doing? Oh, they are making iPhones, right? What are they doing? Say Tesla. What are they doing? Right? They are making cars, right? So find out like what they are doing and what is the sector they are in, automobile sector or technology sector, or which sector they are in, right? And who are all the competitors? That is very important, right? If you are going and finding it out, you need to find who are all the competitors, who are all going to bet against you. Because if you are buying one company, right, that means, right, there are other companies competing in their business, and how the other companies are doing against this particular company, right? That is very important. It's like you have 5 friends and you are doing it. What are the other people doing will let you, I mean, like they are taking your business, right? So then you will be performing low. So the competitor is also important, right? And then fundamentals is so important. Like, okay, how much money they have. So if you are having a business, how much money you have, what is your past performance, how much revenue you are getting, how much profit you are getting it from the business. All those things are called fundamentals. You need to learn about the fundamentals. And the third one would be is technical analysis. Technical analysis is nothing but I showed that graph, right, with small bars and candles. So based on that, hey, this company is going up and up and up. Yeah, good. Or it comes down, or it's going sideways. And there are a lot of things on the technical side of it to understand the behavior of the company and the stock, because you cannot go blindly with the news. And the technical analysis is nothing but you are analyzing the people sentiment, whoever is buying and selling that stock, right? You are nothing but analyzing their sentiment. Oh, when are they buying and when are they selling? Or is the people interested in buying this particular stock right now, or they are interested in selling the stock right now? Do I having a buying opportunity, or do I need to sell that stock if I'm having it, right? So those are all the things on the technical analysis. And the last one, which is important, is how is their past performance, right? Like Apple, right? They are in the business since like 83 or 84, 1983 or 1984, right? You can have everything and then see like how they performed over the time, right? Every quarter, how they did. Can I do it? So that's where, as we talked about earlier, that's where I built modeling, I built new indicators and things like that to understand the past performance. Based on that, how the future is going to look like. There is no guarantee, because this entire stock market, entire thing is more of a probability study, right? And the more probability of going towards your direction, which is like it's going up, or it's a good company and things like that, you are safe, right? And you need to have a strategy, right? Hey, if it is not going in that direction, if it goes south, then I need to walk out. That's fine too. So we build AI models and things like that, understand, and also the news sentiment, right? If the news, you are getting a very bad news about that company, keep on getting it, right? Then you means like, hey, there is something wrong with that company. So if you are holding the share, you need to sell it out. There is something wrong, right? So these are all the ideas you will get it to analyze a stock. Now you may think like, oh my God, there are too much. Like if I'm throwing a stock, it is going to be too much to analyze and understand, kind of, right? So what you can go was, you can go to finance.yahoo.com and you can search for which company you want. Here I searched for Apple, right? And you can see like how Apple performed, and you can able to see their statistics. You can, how much is the company's market cap, how much is the financials, all those things are there. How is quarterly they are doing, how is annual they are doing, what is their past performance. There are a lot of data out there in the internet which is free and you can able to use it. But for me, it's so much overwhelming, and I don't want to spend like 2 hours 3 hours sitting and understanding one stock. So when I start doing this one, all I need is like less than 30 seconds to a minute. I need to understand that company. How will I do that, right? So this is the system which I built, right? And with a couple of other of my close friends. So what it does is, as I mentioned, there are three parts. Part number one is the first top one about the company, right? Again, I took an Apple as an example. I took a company, and you will see like what that company does, right? As simple. And then how is their investment looks like. These are all our algorithms that we wrote and find out. So it will tell me like, hey, how are they doing, right? And gives me some basic understanding about it. And we'll be tracking like almost like 9,000 stocks, 9,000 companies. So you can able to search for the company, and I can show you some examples. And then fundamentals is basically how each quarter that company performed, right? That is important, right? This each candle is one quarter. So if you see, don't worry about like what is that candle means and things like that, right? If you see it in a plain thing, what happens? Oh, this is going up and up and up and up, and then oh, they're going slightly down and they are going up. That's all you need to know. You don't need to do a master's in like how the candles works and things like that. If you are interested, that's different thing. But as a layman, if you are seeing it, oh, is this doing good? Looking at it, yeah. And then these are all the quarterly results, right? Each quarter, how their results here. And then if you see this fourth bar, right, last 3 years of their quarterly, the fourth bar is the fourth quarter result. This looks interesting, right? Each fourth bar is getting taller and taller. What that means is they are doing really good business at the end of the year, the fourth quarter of the year, right? Why it's so? Means they are selling Apple iPhone and they are getting the new model only on the November-December timeframe. So their sales would be really high in the last quarter. Interesting, right? So based on that, you can think through, can I buy it? Okay, can I buy it on December? And then I know January when the result comes in, it goes up. Can I sell it? Could be your strategy, right? So when you are seeing everything in one place as a holistic view of it, then you can able to get an idea of it, right? And the technical analysis, right? So this is a daily chart, right? And this ones are the analytical modeling, which tells you, hey, this is the zone where it started playing. So if you see here, hey, it comes down, it hits the zone, goes up. Now it started coming down. What that mean? Okay, if it comes down, so I know go need to buy it. I'll wait. When it comes here, then I can buy it. That could be your strategy. So it depends upon how you are seeing the company. You can able to understand it, right? So all we are thinking is, right, hey, I should not be taking like more than a minute to understand a company, and then I need to go forward with it, right? So I'll ask you guys to give like maybe like one or two favorite companies. We can go and we can look at it how the company performs, and then we can move on. And then when we have some time at the end, I have no problem, like we can go for a bunch of companies. I will let you guys to tell like how the company looks like, and then we can make a decision. Okay. So if you guys want, share me a company, what you want to look at it. Any suggestions? All right, CBS, cool. So we took CVS. Okay. All right, Tesla. Okay. Well, let's start with CVS. What do you guys see here? Right. So CVS is, you can read through it. You can know. Say it's a pharma company. And so basically you understand what that company does, right? And then here, if you see the quarterly thing, how are they doing, right? Okay, quarter like last year, 2020, they did really good. And then 2022 started like a little bit down, but they didn't come down below $80. That's cool. And then when you see here, what that means? All I'm looking for is don't complicate what is revenue, what is EBITDA, what is income tax. Don't worry about it. Do you see any red here bottom? Oh, yeah, I see some red here. What that means? Oh, last quarter, they didn't do well. There are like a lot of income tax, net income was low. Something is going on with this company, right? And then the last quarter, it was good. Okay, right? So what it in turn means is, are you going to buy it as a swing trading? Or are you buying it for a long-term investment? Those are all the things you need to understand, because selecting a company is okay, right? You do fundamentals, you do everything, and then you need to think through, right? What is my strategy? Am I going to buy CVS and then wait for 5 years, 10 years? Is that going to be your strategy? Or am I going to buy it and next week I'm going to sell it? That is that the strategy? So you need to define that strategy. And then here is our recommendation comes in. Say if you are looking for a growth, right? Oh, it's -6. It goes like +7 to -7. -6 is not good. What that means is it's not a good for growth at this point in time based on our model. Is it going to be good for invest trading? Probably yes. The rating is 3. Probably yes. The PE ratio is really high. I mean, I can explain what is PE ratio in some other time. It's an interesting topic. Anything like 10, 8 to 12 or 15 PE ratio is really good for investing. So now the PE ratio is really high. So most probably, do I need to buy it right now? Let's see, how can I buy it, right? You go monthly. If you see monthly chart, so it was in 50s on like 2090s, it is in 50, and then it went all the way up to like $100, $111, and then started coming down. What that means is like, okay, if it comes to a bargained price, right now it's in a bargained territory, which is like $90. Is it going to come down? Could be, based on the entire market, what it does, and then you can make a call, right? So if you are going here, what is investing thing, you can see the holistic picture of like that particular company. The company was started on 1980. At the time, it was like $1, right? And then at one point, it went all the way up to 112, which is like the top on 2015. And then what happened, it all the way come down, and then now it went up, right? So if I'm getting it for a $50 CVS, it's a good bargain for me. And if the company is stable, I'll buy it, right? So this is the idea you need to come up with. And how long does it take to make this one, right? If I'm going slow, but if you know the system and things like that, it would be you need to do it. I'm not saying you need to have the system for it, because I built it for my kids. Because of a software engineer, I need to do something meaningful. If I'm a civil engineer, I build a building. But as a software engineer, I need to build something for my kids. Now I would love to give it to you all to do that. But the idea behind is you can do the same research in Yahoo Finance or any other thing, and then getting an idea. So I've got a bunch of things. I'll try as much as possible. Ooh, there is too many. Let's go with Tesla. Right? Okay.
Daniel, you raised your hand. Sorry, Satya. So he raised his hand. Do you have any specific question, Daniel?
About the CVS analysis,
Mm-hmm.
During 2019 was the COVID season, and CVS is a pharmacy and an area where you can print passports and papers. Because of confination and sickness going around, wouldn't that add make CVS a bit better than before?
Why do you think?
Because when you showed that other chart,
Mhm.
they should have earned a bit more money than get less money than compared to 1980 or worse.
Beautiful. So the question is, right? So you are thinking about, oh, this is the medications, and you can get it in CVS. In reality, right? You need to. This is a beautiful question, Daniel. Thank you. But go back and think, right? Did you went to CVS to get all these medications for COVID? Number one, probably not. You can get it anywhere, right? You can go to the hospital and get vaccinated. You can go to anywhere outer. Not necessarily you need to go to CVS. CVS also, of course, right? Don't take me wrong. But it is not a proprietary that you need to get it in the CVS itself, number one. And number two is, the entire market is down. Everybody got panicked. Nobody knows what's going to happen on COVID. We were told like, okay, shut your door and be inside, right? Nobody knows what's going to happen, right? So at the time it went down, right? But your point, right? Is it going to go up? Probably yes, right? So when that one happened in 2020, right? At this point in time, February 2020, that is what that whole thing happened. So I'm just showing up here, 2020, it become like say $68 or $57 it came in, right? And then it continued. This is each one is 1 month. Okay, it continued almost like end of the month. Sorry, end of the year, right? And then started climbing gradually. But you're right. If you buy it in like say $56, that's what I'm saying. This is the value investment, right? Is CVS going to go out of business? Probably not. They are having a really a good thing, right? Can I buy it? Yeah, of course. In your strategy, right? In the COVID season, this is good, and $50 for CVS, it's a good trade-off. I'll go and buy it, right? When I buy it, the peak is like $100, right? So you buy it in $50, sell it in $60, $100, you double your money. Hope it makes sense. Okay. And then, how are we doing with the time, Ronan? I'm getting too excited.
Yeah, I think they've spent
like we
at
will
least like 15 stocks now.
And I mean, like I can stay a little longer if you guys are interested. Let's cover this one and we will start making this fun. Okay. To conclude this whole topic, right? So I told like 3 types of investments there. One is investing, which is for a long term, right? Another one is swing trading, which is like you buy, sell it in 2 weeks, 3 weeks kind of time frame. Day trading, you buy and sell within the same day, right? These are all different types of investing, right? Don't conclude yourself. That's what I keep saying, everybody. Don't conclude yourself, oh, day trading is not my cup of tea and investing is not good for me. Don't explore it. It's nothing cost you. You can do it in your paper account. You can do it in, there are a lot of websites I can tell you, like you just go and buy it and see how it goes and things like that. You no need to sweat yourself, but at the same time get that feel of it, right? And the next one would be is understand what is your strategy, right? If you are doing it, as I said, right? If you are buying a CVS, is it going to be an investment, or is it going to buying it for a swing trading, or just buying it for a day trading? So you need to understand what is your strategy with respect to what type of an investment or trading you are doing, right? And then based on that one, you need to have a set of rules to engage with the market. Oh, okay, if it is coming this level down, then I'm going to buy it, and if it goes this level, I'm going to sell it. You need to have some rules, because you should not be going without rules, right? It's like driving the car without rules, right? There will be a lot of accidents. So you need to have your own rules to define, hey, this is what my rule is. If that rule comes in, then I will buy it or I will sell it or whatever the things are. And the fourth one would be is whatever the rules you put, first of all, you need to trust your rule, right? Because first time you use that rule, you made like 20%, 50%, right? You'll be happy, right? Next time you use the same rule, you will lose 50%, right? Then you will go back and change the rule, right? And then it will be, so you should not be changing the rule every time you trade, right? If you are asking me what is the rule, we can talk about it, but you should have a rule. And then you need to trust the rule. How you can trust the rule is basically you use the simulation or whatever the thing. Again, simulation, you can get it in TD, Ameritrade, any other trading platform give you. You can go back a couple of years and you can test it, how your strategy works. And it's not complicated, right? Hey, can I buy it at this level low and then sell it at high? Simple. You keep your rules simple, it's okay. And the last one would be very important is you need to be disciplined and you need to be patient. That is more important, because you are having a rule and you are buying it, or you are missing it because of a rule, then you should not be cursing yourself. Oh my God, I missed it because of this one. So I should have changed it. I should have buy it. Kind of. You need to define your rule and you need to be disciplined and patient. Wait for the fish to bite your robe or bite your bait, and then you can do it. You cannot get all the fish in the ocean, right? You need to wait for your own fish and get it out. So that's what you need to practice. That is what I'm trying to help to practice this model based on what you want to do. You can do all three if your time permits, right? I'm doing all three. Day trading, morning PST timing, Pacific time, all of us there. 6:30 to 7:38, I will do day trading, and then my day job starts, right? It's perfect for me. If I'm in New York, it would be really hard. I cannot do it because my day job starts at 8 o'clock, right? And swing trading, it's pretty easy. I'll buy it, I'll hold it, I have my phone, I will know my alert whenever it comes in. Okay, can I sell it? Yeah, I can sell it through the phone. It's pretty easy, right? And investment, yeah, it's simple. I'll buy once in a while and then I'll hold it in the account and I'll forget about it for 3 years, 5 years. It would be easier, right? And most importantly, as I mentioned, if you all doesn't know, he's Warren Buffett. You should be disciplined than smart. As long as you are disciplined, you can get through this one. How to get disciplined? If you are having the rules, then you will be disciplined, right? So, couple of questions. Somebody asked, Divya asked the exact right question. What is S&P 500 and the individual stock? Again, it depends, right? What is your strategy, right? Think about if you are having a long-term strategy for like 10 years, 15 years, right? I would say go and buy S&P 500 like every month, one stock or whatever it is, and then keep accumulating it, right? Over the period of time, it's going to have a return. As a simple example, right? 1995, if you'd have bought it, this is 95. If you'd have bought it, it's $50. And now it's like around $400, $450. At the max, it went to 470 or something. And now it's hovering around $400, right? And then it gives you a dividend, annual dividend also, right? If you are having the track record, right? So if you are having that long term, say for example, for you all, right, kids, right? Buy one share per month. It is expensive, $400 per month, or 2 months once, 3 months once. Buy one, but you should be forgetting it. Any news comes in, any disaster comes in, you should not be touching it. Buy one, holding it, and your target is I need to do it after 10 years. That is the long term. If you'd have done it, it will work very well. Why? Because S&P 500 is an index and it is a collection of 500 large companies. What will happen is if one company doesn't perform, they will take out that company and put another company in, right? So you no need to worry about it. You just buy that one and then you will be having it. The question comes is, can I go and buy an individual stock or can I go and buy an S&P 500? Again, it depends, right? I don't have time. I don't have energy. I don't want to go and research all these different companies. I just go blind with the SPY. Go ahead. You can on an average, like you can get like 10%, right? See here, 1995, they're 37% return, right? And 2018, you have minus 4% return, right? So on an average, if you put a math, very decent 10% will be there. And also it's growing over the period of time. And if you compare with the inflation, if you guys don't know about inflation, you can Google it. But if I start talking, it will go in a different direction. But based on the inflation, keeping it here would be really a good strategy for down the line 10 years. But again, I'm saying this should be a long-term plan, at least for 5 to 10 years, not for a short-term kind of a thing. This is one of the strategy. The other one would be is a simple example is swing trading, right? What is swing trading? Swing trading is basically you will buy, hold it for a couple of weeks and sell it back, right? That's swing trading. So in this scenario, again, it's Apple, it's a weekly chart. We have this one marked, right? And then say, for example, it hit here, 180, and then it came all the way to 130 here. It touched somewhere closer to here. And then again, it pump up back again to all the way back to the same location, and then started coming up, right? So it's basically you buy here, you sell here. And then you short here. Short is another strategy. You can short and then you can cover here, and then you can buy and then sell here. So it's basically you are swinging with the market, and then you need to identify the right stocks to swing, and you need to be patient too, right? If you are buying here, each one is a week. So if you are putting like how many weeks you have, like at least 10 weeks, 10 weeks is like 3 months, right? So you need to be patient for 3 months to beat. Or if your strategy is, you know what, if I get 10% of my profit or 20% of my profit, I'm out. I don't care about what's going to happen. Great strategy, right? You buy it whenever it reaches 20% profit, sell it, go for another fish, find another fish and invest in on that stock, right? Daniel, you have a question?
Is that vol volat
Volatility?
yeah.
Yes, beautiful. This is basically the volatility, because if you are seeing this high, let me open the great questions. Love it. So let me go to Appy itself. Right. So go to weekly. See, if you see here, right? See, I'm just hovering over one candle. What it shows is this is a weekly. So Monday morning when the market opens, that is the opening price. If you see it, the O comes in right on the top. That is $145.55. That is opening. And then Friday evening on 1 o'clock, right? Afternoon when it closes is $137, right? And then it went all the way high to $149, low to $132, right? This is the volatility. So basically it fluctuates up and down. The bigger the candle, the bigger the wicks. That means like it was so much volatile. That is, in an easier way, if I want to explain, that is volatility. If you go in a theoretical terms, we can talk more around it. But in a simpler thing, right? Whenever the price goes really swings between bigger number, right? $10, $20, if it swings, that is more of a volatility. Hope it makes sense. Okay. All right. Final words, right? Before I hand it over to Nimilan for 10 minutes. So find out what you are good at it, right? Don't conclude yourself, oh, I'm doing only investing, right? You may be really good in day trading, right? Or you may really good in swing trading, right? All I'm saying is explore it and find like which one you are good at it. And the moment you find out where you are good at it, practice it really well, understand the rules, define your rules, and then follow it rigorously, then you will be good. Because I had a forex, I had a crypto, I had commodities. I tried all the markets and all different strategies and everything. Then I'm finally, and you know what, stock market would be my cup of tea. Let me stick with that one, and then I build my rules around it, right? And if you guys want to have it in the stock market, which type of things are going to look like, so you can do it as well. Okay. And as I said, right, we don't want to stop it. This is more of an introduction, as Saravanan mentioned. We would love to have a course for like 12 weeks or whatever the time we can. I can come up with a thing, and weekly once we can talk about it. I'll educate you guys, and we can have games too. I mean, like Monday morning, you can go and buy Apple or something, right? And you can note it down why you are buying that, right? What is my rules? Why I'm buying it, and when I'm going to sell it, how much I'm going to risk it on this particular thing. Because remember, every business comes with a risk, right? How much you are going to risk is very important than how much you are going to get profit, right? So you need to define all the roles. So we can try and educate. It's going to be really fun. We can try it out. Okay. And as a token of gratitude, right? Since you guys come over here, so we created an Discord channel called P3 Academy, and then you guys can come in. And then what I'm going to do is I'm having another channel where I'm going to put all the investment related things, because basically my AI and robot bots are running. Based on the bots running, it will throw like really a good investments, stocks and things like that. Again, it doesn't mean you need to go and blindly buy it. Just for you guys to understand, hey, these are all the things, how it looks like, and out of curiosity, you will get a lot of more questions. Just follow it and feel free to ask questions as much as possible. I can answer you. And Saravanan, if you are okay, I'll put the link on the channel.
Yeah, sure,
sorry,
Satya.
chat,
Yeah.
or you can put it as well.
Yeah, you can post the channel. You can post it in the chat box. We'll also send it in the group later. Yeah.
Okay, thank you. And last thing is there is a YouTube channel called P3 Traders. You guys can follow that. My son Nimalan, he is from third grade. He used to create a lot of videos on his simulation. So you can watch what he does so far. And I will call him to give you guys a quick demo on how he does the simulation. Okay. Hey, Nimalan, come on in. All right. Can you guys able to see the screen?
Yeah, we can see
Okay.
the screen.
All right. Go ahead. Say hi. Here.
I'm gonna be waiting.
You explain this one.
This is the date when it started. It started in 2010 to 2023. So in this box area this time we need 936. So I need to click the arrow 6 times, 5 times. And now when it looks like this, light up, that means it's something good is happening. So I'm gonna buy right here. So let's buy here. And let's see. Amazon. Not bad. This is 0. Okay. Let's see. Apple. Apple is good. But actually, let's try Apple. That 5%. I'm getting out. And let's see. Netflix. I'm going to be waiting here. That's the only one's out. Oh, this one's out too. I'm thinking to buy here. I'm gonna wait right here to get a little lesser. Okay, it's not a successful game, but yeah. But this is game, and you need to two trades here, and then I'm gonna click game. So I'm gonna be waiting here. Let's buy it here. I got a 0. Not bad. Alright, buy it there. Okay. Let's go to Facebook. Just buy it right here. Got 7%. I'm out.
Okay, all right. Let's tell them. Okay. So thank you.
Thank you for seeing, and I hope you guys like it. And bye.
Thank you, Nimalan. It was really good. You demonstrated the game mode. Man, it's like a fortnight.
So what he did was I had like 10 years worth of data, like almost 12 years. It starts from 2010. I have like 12 years worth of data. All these things are basically algorithms. So whenever this lights up, that means like, hey, something is happening. And this is an option trading. And most of the time it's a 2 minutes trade. So whenever you click on it, say first 6 minutes, there is certain rules, as I said, right? So first 6 minutes you should not trade, and then after that you need to trade, and then there are like set of rules. So I'm like training him to how to do it, and all these rules are going to apply for long term also. So if you can able to make a decision in like split seconds, you can make a same type of a decision over the period of time. Should not be a big thing, right? So that is the whole idea of this game. And when you are using the same thing for the live, you can do it, because this one automatically, this is what I'm doing, like this one automatically connects to the interactive brokers, and then every morning when I spin up, I'll do the same thing. And the simulation is for my practice, so I'll make sure like I practice well and then get into the game kind of a thing. So this is like my 12-13 years worth of work, and along with one of my other friend. He is in Mexico, and Florida, two other friends. So we built this system over 10-12 years. And again, I'm not here to sell anything or something, but this one is passion. I want to build it for my kids. Now I'm really, you guys also my kids. So I want to really extend the knowledge, not the software or anything, extend the knowledge to you guys, that I want to give you guys an financial freedom. Because we as a parent, most of the parents, you all, we found a job, we studied, found a job, come to US, and then we are working for the money, right? But for you guys, you should not be working for the money. You should be going towards your patient, and whatever the money you are earning, that money should work for you. So you should be having a financial independence as soon as possible, right? In your 25, 30 years, you will have a complete financial freedom. Then your entire life of another 60 years, 70 years would be awesome. So that's what we are all looking for as a parents. And good luck. that concludes our discussion. What else? Yeah. Any Q&A, I can stay as long as you guys want. No problem. You guys can open. Surrounding, if you want, what is the plan, right?
Yeah. So thank you so much, Satya. Those concluding words are, word of wisdom is awesome, and it's really it's a fulfilling journey of 12 plus years, and you're sharing it with us, and it's really good. So we have a word of thanks at the end, and before that, we would like to open up a Q&A, like let's say 5 minutes. Students, you can unmute yourself and provide comments or ask questions, or you can wait for another 5 minutes to let Chinmay to do a vote of thanks.
Yeah, we can do a vote of thanks, and then
yeah, okay,
cancel the recording, and then we can continue if you guys
okay.
want.
Yeah, that's also a good idea. Yeah. All right, Satya. So let's move on to the vote of thanks segment. So this is an interesting segment, right? So we put together a session, and then we want to have someone from the students community to represent and provide, acknowledge what has happened here and provide a vote of thanks. And I would like to introduce and call upon Mr. Chinmay Swaminathan, who is in a junior in Eleanor Roosevelt High School in Eastvale, and who is also one of the lead volunteers in Style, and also a very active volunteer in Eastvale Tamil Kalvi. Every week he meets students, and he, most of the students know here in Eastvale Chinmay, and how he's his smiling face. And I would like to call upon Chinmay to deliver a word of thanks speech to Mr. Satya and then the participants. Over to you, Chinmay.
So, as Simon Uncle said, I'm Chinmay. I go to Eleanor Roosevelt. I'm a junior. So I think this was a great lesson for everybody who wanted to start investing young. Like many things, whether it's like studying for a test, planning for retirement, or learning something new, or investing in this case, it's 100% better to start earlier. This is something I believe in strongly, as even I tried starting in the COVID pandemic and kept learning since then and even now, and I'm still using those same principles I learned in the beginning. And I think it's great that Mr. Satya is covering all these topics, and I think everybody, everybody should know all these like topics in finance. I think this class will have like a great impact on the students because it teaches us the different types of investing, like growth, value, and income. Also, as well as how you want to put your money to work. This includes like compound investing or day trading, and it covers the core principles of deciding how to invest. I also appreciate Uncle informing us the risks of different trading, because obviously everyone has different risks tolerance, and there's obviously a lot more safer methods out there. And I think he's guiding us in the right direction for that too. It's important to understand that you should also find a style of trading you like most, and you should have an exploratory mindset, meaning that you shouldn't always stick to one kind of trading, and you should be open to other ideas, especially from other people or people who know a lot about the topic, like Mr. Satya. I'd like to thank Mr. Satya because as I've been like investing for nearly 3 years and I'm still making mistakes, this information has taught me a lot of insight, and I think it'll be very useful in my practices later on. I definitely want to ask Uncle more about trading and strongly support the 12-week program that Mr. Saran Uncle proposed earlier. I also think Uncle has made great contributions to Style, not just from this amazing class today, but also being the treasurer of our organization for the last 4 years. Making sure our finances are well maintained is a position I can well respect. I really like the indicator he showed us in a demo, as well as his kid showing us the stock market game. As I'm using indicators daily in the morning at like 6:30, I like this indicators user interface, and I definitely want to try it sometime in the future. I think it'll be also more useful for long-term investing, not just like trading options. So I encourage everyone in this like call to try Uncle's indicator later on. I want to thank everyone, like the students, parents, and the volunteers for investing their time in this class. It's really important for the younger generation to be empowered with this knowledge. And I want to thank the STYLE program as a whole for giving us the opportunity to empower our students and youth of this community. Thanks, Uncle, again for teaching us about this topic. I think it's really important.
Oh, thank you. It's a great pressure, and this is a beginning. Like if you guys are really interested, we can talk more. And this is really fun. And over 12, 15 years, I did this one. So it's really amazing to share that knowledge and thought to you all. And as another token, I saw a lot of people join the Discord. When you go to the Discord and you go to this channel notes and resources, there is an article that I wrote, which explains very detailed information about investments and things. It is called Wealth Management and to become your own hedge fund manager. It's a really a good article. You can able to talk about like different markets, different investment trading, whatever I covered it here, you can see it more detailed. And each options, right? Stocks, options, commodities, what that mean, crypto, all those information, you can have it. As a token of gratitude, you guys can download it and you guys can read through it. It's a good article for you guys to do. Okay. And yeah.
Awesome. Thank you, Satya. Thank you, Chinmay. That was a wonderful summary. And I forgot to mention, as Chinmay mentioned, Chinmay himself is a student, a trader, and he's very active in various investment in the stock market. And students who want to get more inspiration from another student, you can reach out Chinmay, and we'll get back to you with more updates on future classrooms or sessions that we are planning. Thank you. Thanks, everyone. Let's now stop the recording. And
if you guys want to have